How is it going, guys? It's your boy here, TB at S&B. Jumping right into it, looking here at the S&P 500 daily chart right now. Today, let's go to SPY, actually. Forget about SPX. All right, well, if you guys watched my video yesterday, obviously I was crazy bullish. I thought we were going straight up after today, yada, yada. I was wrong. It happens all the time. If you're new to this channel, you'll discover that soon enough. But today, completely normal kind of day. Not unexpected, but not what I wanted to see. Obviously, I'm bullish. I want things to go up. But this is healthy. This kind of movement is healthy. If you look here at the S&P 500 daily chart, you will see we got a textbook inside bar here, which inside bar, if for those you don't know, big green bar followed by a opposite colored bar that is just inside of the mother bar. So this is the mother, this is the sun. It's completely inside of this one. You see that? The highest high is below the highest high from yesterday. The low is above the low from yesterday. That is, it can be a reversal sign, but it's usually, when it's in a trend, it's usually just a strong sign of consolidation, especially when we take into consideration the volume that we saw on the day today, considerably lower than we saw yesterday, considerably lower than most of the green days we've had in a while. A pretty strong uptick, but nothing that is scaring me. We are still holding that massive support at 408, which is absolutely huge. And now it is just clear that the bears are sitting up here and they don't want to give up this level. So it's going to take consolidation. It's going to take time. So this is a completely healthy kind of price action day. And you can see why the bears, look at this. I mean, the bears own this. This is their land. They're not just going to let us run straight through it after 2 days of consolidation. So if anything, I was a little silly to think that we could just go straight up after we've only chopped around for a few days. Clearly, that's such a huge level. We're going to need more consolidation. And this is exactly the kind of price action you want to see if you want to see consolidation. A perfect inside bar on lower volume than the trend. If we had huge selling volume on a day like today and we broke below 408, my tone would be much, much different. But this is kind of completely standard for what you want to see consolidation-wise. So nothing's changed for me. Still holding all the long positions. I didn't change my stance on anything today. But if we look around the market, I think Google was the big mover today. Google down 7.5% today. It took a leap off a cliff today. We had a big AI event. Google had an AI event in Paris today that was obviously received a little poorly because, yeah, it went down. It went down massive on like monstrous volume, just crazy volume. I mean, this is almost the highest volume that we've had since February of 22 on Google. Just crazy. And if you go to the 4-hour chart, it was mainly in this first hour. It was just, this AI event was just very disappointing, I think. There was an error on one of the things that they did. There was like a factual error on one of the ads. Like they were trying to show off their new Bard AI. It's the competitor to Chat GPT, I think, or whatever that Microsoft has. I mean, these companies, we're in an AI race. They're racing to see who can destroy humanity quicker with their AI. So when Google came out with this announcement, the stock went crazy, and now that they have a little event showing it off, it was very disappointing, so the stock dumped. And Microsoft, on the other hand, even though it ended up closing red today, for a moment there, it was very green. I mean, it was leading the market. Google was down a shit ton. Microsoft was up a bunch. It ended up giving all those gains back. But also, just not really like crazy alarming to me. I think this could just be a freak out to that thing, just a spike in volatility on Google. It bounced right off its downtrend, long wick to the downside. So it hit this demand zone, and buyers are still hanging out there. It hit that demand zone, and it got bought up, baby. No big deal for Google, I don't reckon. So big dip on Google. If you like Google, buy the dip there. It's closed perfectly at $100 today. NVIDIA. What do we talk about with NVIDIA? What did I tell y'all? I says to y'all, I say, hey, we're not just going to run straight through this level on NVIDIA. NVIDIA is just, it's an insane stock. It is absolutely insane. I cannot believe it. But this is like the most bearish looking candle I've seen on NVIDIA for a while. Not saying like, hey, it's going straight down from here. I'm saying it's probably going to do a little consolidation. And I said that is what you should expect because we just have a massive supply zone up here. Sellers just sitting up there waiting. And I said that. I said, hey, 227 right here is going to be huge. We're not just going to run straight through that. And what do? I mean, perfect. 227, they tried, and sellers just immediately stepped in. Big selling volume. They held it down. So watch for Nvidia to dip maybe a little bit, maybe do a little sideways consolidation here. I mean, this thing can only go straight up for so long. It's bound to consolidate at some point, and I would expect that over the following, at least for the rest of this week, maybe in the early next week for Nvidia. But target is still the same to the upside on Nvidia. Let's zoom out and look at my targets. So next leg, I mean, break 227 on Nvidia. Mount that level and we can see some fireworks straight up to 260. No kidding. That's my target right now for Nvidia is 260 to the upside, and then we have a massive level above that at 290, and I expect those levels will show some bearish resistance once we get there, but that's what Nvidia looks like it wants to the upside. Nvidia, nothing's really changed. We just hit that resistance. AMD has been chopping around a bit. It had a bit of a down day. It was going mainly sideways for a lot of the day, but it eventually ended up coming down a little bit. It just hit that resistance, and now we just have a clear resistance line, this yellow line right here that we're just tap, 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 and we're just going to have to consolidate before we push above that. But AMD is the same exact thing. They're right. It's crazy. AMD and NVIDIA are right at these same spots on their charts where they're running into massive supply zones that have no liquidity. So it's going to hold up for a while, and it's going to be a rough push, but still, just look at the volume. Like, no volume. A red day on AMD that's just been going crazy, and sellers are just nowhere to be found. It's not really even sellers. It's mainly just buyers stop buying for a moment because everyone's looking at their charts, and they're just like, hey, reality check. Tech cannot just go straight up every single day. There's going to be days where it's going to consolidate. It's going to pull back, consolidate, healthy kind of stuff. You want to see these things. You do not want to see just straight up. This is what AMD did back here in August, just straight up. You don't want to see that. I know it looks fine and dandy, but look what happened next. We go straight back down. So you want to see that push up, consolidate, push up. I'm going to say that over and over and over again because I feel like it's so easy to get all wrapped up in the bullishness, and you have to zoom out and be like, hey, AMD has done this in the past, but it always has pullbacks. It always does this. It's going to rip up and have small little pullbacks, consolidate before the next leg up. It's just always going to do that. And that's what AMD is looking like to me. That's what I'm seeing on AMD. If we look at Amazon, Amazon is just in the dumper. It can't do much of nothing today. Amazon's sitting right at $100 now too. So Google and Amazon both have rejected their 200-day moving average, that blue line. They've both rejected that perfectly. And they're pulling back because they both had pretty rough earnings. So same thing. If you like buying the dip, then Amazon is dipped pretty nicely. It's dipped like 14%. So yeah, that's what Amazon's showing me. But if we do have support at this $99 level on Amazon, which it looks like we do, then I believe that would be a nice spot to find a bounce for Amazon here. If you see that. See where that was resistance, and now if that turns into support, very bullish, and we push up, and then my next target on Amazon is still 120, 119.50 on Amazon, and that's the next target. And because we know bears are going to step up on Amazon here at 121, so 119 to 121, I know the bears are going to step up at those levels. But it's also just another one of these areas. Look at this spot. Look at that. There's just nothing there. No liquidity. We just dumped right through that spot in 3 days. Back in October. So there's no liquidity there. We could easily rip right through it again. That's what I'm seeing on Amazon. Checking out Apple. Same exact thing. Look at the daily. Look at these daily candles. Same idea. Same exact thing. Inside bar. Perfect inside bar on Apple. And look at the volume on Apple. Just like really zoom out. Really. Look at the volume. I mean, we had lower volume back at Thursday, the 26th of January. We had lower volume. But this is incredibly low selling volume on Apple. Just very disappointing. I mean, for a stock that has just gone straight up, this is all it can do. This is all the sellers. That's it. So this is why I'm still so bullish, even though we had, I mean, my percent and 3/4 on Apple is pretty rough. It's a red day. I'm in calls. It hurts. But I'm not selling because there's no reason that there's just nothing on the chart telling me like things aren't still most likely going to continue to the upside. It's the exact same thing Apple did the other day. Look at that. We had a big green bar off that earnings, inside bar, big green bar, another inside bar on Apple. I mean, it's just crazy. It's just your perfect consolidation, exactly what you want to see. And obviously just, I mean, just like a picture perfect bear flag or bull flag that we're in. So, going to be consolidating. 155 is the massive level to reclaim on Apple. But we just look at, I mean, look at these wicks. It's like perfect. 57.50, 157, 157.50 is the high over here on that candle. 157.38 is the high on this one. So we know that's where the bears are going to hold their ground. And you could just see it's the same thing. Very low liquidity at these spots. But the bears are huge here. Look at the volume selling that was on that candle right there. Get out of my way, that stupid ad. Right there. We get there. Sellers step up. Big volume. So this is where we expected the sellers to step up. But in the past, when the sellers step up here, they yank it down. And now this is all they can do, really? So these are all the signs pointing towards the bears are just weak. They're not jumping in. And frankly, right now, I've been thinking about it a lot. And you still just go on Twitter, you go on Stock Twits, you go on Weeble, the comment section, and you see all these retail people who are just like loading puts. Everyone is just so convinced that this is a fake, that this is just complete fake bull trap, and all of us dumb bulls are just going to get our clocks cleaned. And hey, they might be right, but right now there's just no bad news. There's no reason. There's nothing new that's come out that is going to make the market just turn around and go straight back down. And until that happens, I will remain bullish. But right now, I was thinking about it. I'm like, man, there are still so many bears. So many. That the most painful thing, that's usually what the stock market does. It usually does whatever causes the most pain to the most people involved. And right now, it feels like the most pain is just jacking it straight back up. Just keeping it going up. Just ripping more puts. Shredding more puts. And there are still so many puts out there. So that is also kind of backing up my bullish thesis. You know, it's just like, there's so many bears out there still. What causes the most pain? And institutional, like hedge funds, what the hell is that? Hedge funds are still really short. There's still a lot of short in this market. And I think we can just see crazy squeezes, but we have to retake these huge levels. Why is this such a huge level on Apple? Because the bears have held this since all the way back in September of 22. I mean, it's massive. So we know shorts are going to begin to exit if we lose this level, because if you have to flip it upside down. Shorts, they flip their charts upside down. So if I was a bull on Apple, which I am, like long term, yes, absolutely. I would be thinking, hey, I'm going to hold Apple because I think Apple hit the bottom right here at 125. If we go below that, I'm probably going to cut because that means we're going to make a new low, and I don't want to hold that new low. So I'm going to cut, take my losses. Same thing for the shorts. The shorts, they do the exact same thing, but in reverse. They go, hey, you look at this. You look at where Apple has bounced off of. You see the recent highs on Apple. I'm going to short this thing because I think it's going to go down unless it can break above that and break the resistance. It's the exact same thing. Shorts, they end up getting squeezed when you break these key levels because they're just so massive. So massive. I love Apple to the upside. Nothing's changed there. We haven't visited the Nasdaq yet. Looking at the Nasdaq, would you look at that? Another inside bar on pretty not notable volume. I mean, pretty good, but it was mainly Google. You got to realize Google is a $1.3 trillion company. It is very heavily weighted in the Nasdaq. So a lot of that is just in Google. A lot of volume in Microsoft today as well. Not so much in Amazon. Not so much in Apple. Tesla, still solid volume. Tesla just doesn't stop going up. It's absolutely insane. So when I see this kind of noteworthy volume on the Nasdaq, it really doesn't worry me because it's still just in our inside bar. We're still in this uptrend. We still haven't lost the key level. I keep shouting from the rooftops, 303. We haven't lost that. We closed above it. Haven't lost that level. I get more worried if we lose that level on the Nasdaq. But honestly, I'm going to give it some leeway. If we do lose that level, I think if we hold 298 to about 297, 296, if we were to pull back and hold those levels, I would still remain bullish. But if we lose those, that gets me a little worried. So that's what the Nasdaq did today. I mean, yeah, just nothing super notable. We gapped down, try to fill some of the gap, and it was just sell. So it's the exact same thing as the S&P 500. We just know sellers are up here, supply. We got supply up here, so that is where we got to re-break 310.50 on the Nasdaq. And you can see where the sellers are because these 5-minute candles, look at that. Look at the volume on that 5-minute candle. Mind you, this was a closing candle, but sellers are there. That's what they're holding. And why are they holding this level? Just like Apple, because this is where the bears are. This is it. This is the level. It hasn't. The market, God, why do these pop-ups keep coming at me, bro? The market hasn't been above this. The Nasdaq hasn't been above this level and held above this level since early September. It's picture perfect with Apple. It's crazy. I mean, of course, Apple is like the main thing in the Nasdaq, so why am I surprised? But because this is where a lot of shorts are thinking, hey, I'm short until we break this level. If that happens, I'm covering. Huge, monstrous level. This is just where the market is. This is where we expected to see a little bumpiness. So everything's still just going as expected, and there's really nothing's changed. I see a lot. That's another thing that makes me know how bearish retail is, because we get a day like today and bears are like, here we go, this is it. They're always like, here we go, baby, it's starting, here we go. But then you look at where the market usually starts to dump, and it's usually just on like the volume like spikes. Usually you get like these massive spikes in selling volume. You start seeing selling days where the volume is way more than the previous green days, and then the green day volume really starts to drop, but we still just haven't seen that. We still are getting crazy green volume days, and that tells me that the buyers are still present. They haven't just like abandoned ship like they had back in August, like they did back in March, like they did over here back in November. We're still holding. Everyone's dug in. No one's given up here. So that's really all I got for you. We do have some jobs numbers coming out tomorrow, which I expect those will probably move the market. So if you're bullish, you want to see, I think you don't want to see crazy good job numbers. You want to see bad job numbers, I think, because that's kind of where the market's gone down, was since last Friday when we got those job numbers. So looking at bond yields, hey, red day on the bond yields. That's good. You want to see that. We're bouncing off that trend line. Perfect. Looking at the VIX. So this is another thing. The VIX is it's giving us beautiful signs. Where do we wake up to again? 20. High of $20.12 on the VIX. We have that trend line. Just wicked up to it, bounced off of it. So that's why I keep saying I'm not getting worried if we get above 20. I'm getting a little worried on the VIX if we get above 21-ish. If we get above 21.70, then I'm really worried on the VIX. But the VIX is just doing what it does. It's still just going down. It's still lower lows, lower highs, which is bullish. So until any of that changes, the dollar did nothing today. Dollar's sideways. I don't think oil did anything today. Oil's up slightly. Yeah, oil is having actually a really big bounce. So maybe that is scaring the market a little bit, but not really notable. It's back to where it was February 1st of last week. So really, yeah, it's not doing anything. It's not making any new highs. So just your standard low volume consolidation day. Every day can't be a face ripper. Every day is not going to be, oh my God, my calls are up 100%. But you can't get scared of the consolidation. You also just can't get chopped up. That's why you buy time on your options contracts. My options contracts are out till April, out till May. I have plenty of time to sit through this chop, because I'm convinced we will see a move by the end of this week, by the end of next week. If not, then you take your loss and on to the next one. I'm completely all right with that. But yep, that's what I'm seeing. So that's why I think people come to watch these videos, whoever does. I give the unbiased opinion on the market. I just look at the chart. Chart tells me we keep going up, and I think that's all there is to it. I'm seeing a lot of videos on YouTube now of these analysts just going on about the yield curve is still doing this, the jobs market is still doing, just spouting all this like bearish stuff. Like, this is why you should be bearish. This is why you should be bearish. It's weird that they do that when the market is up, but then when the market's down, they don't go like, this is why you should be bullish. When the market's down, they say the same stuff. Like, it's just weird. I don't get these people that do that, where they just like go back in history and they're like, well, the stock market back in the 70s did this. And it's like, really, you're going to look back at the 70s and you're going to be like, yeah, this is what the stock market did back in the 70s. Like, really? This is a whole different market. You cannot look at the 70s and be like, well, this is what the market did way back in the 70s, and this will probably do the same thing. Or even back in the 2000s. Like, you couldn't. Retail people, average Joes like me, cannot just log onto their computer and trade options at will. That was not a thing back in the 2000s. You needed a broker. You can even just go on and buy your own stock at the time. Nonetheless, options. Like, options wasn't even back around in 2008. So now the fact that retail, then I read a statistic recently that I think they said retail traders make up about like 25% of the volume in the stock market, which is actually a lot when you think about how much money hedge funds have. So that's why I think you can't look back at like these previous recessions and be like, well, the market's going to do exactly what it did back there, because things were just so much different. Anyways, I appreciate you guys for watching. I would ask you to please consider dropping a like and dropping a sub. Drop a comment if you want me to talk about anything, or if you think I'm wrong and I'm an idiot, I'm ugly. Please let me know in the comments. I would love that. Anyways, guys, I'll see you on the next one. Peace.